Hey, this is Matt at ORATS, and today we're looking at Adobe, ADBE, and their earnings coming up. So let's get right into it. ORATS data is showing a significant divergence between implied and actual moves, giving traders an edge in evaluating market expectations. With earnings just 5 days away, implied volatility sits at 49.5%, reflecting the market's anticipation of movement. The implied move for this earnings event is currently 7.5% compared to the historical average of 6.6%. The actual move post-earnings has averaged 7% over the last 12 quarters. This means the market is pricing in a slightly larger reaction than usual, but how does that compare to previous earnings cycles? Adobe's past earnings reactions have ranged from negative 13.7% to positive 14.5%, showing that this stock can move significantly post-report. Here's a look at the last few quarters. December 24, implied move, 7.8%, actual move, negative 13.7%. September 2024, implied move, 6.8%, actual move, negative 8.5%. June 2024, implied move, 8.4%, actual move, 14.5%. Adobe has seen both muted and extreme moves post-earnings, with some quarters overshooting expectations significantly. Given the current implied move of 7.5%, traders should assess whether options pricing accurately reflects the potential risk. Often, we see a reaction the next quarter after a blowout like what happened last earnings report, with the stock down 13.7% while still expecting an elevated versus historical 7.8%. Several key factors could be influencing the implied earnings move this quarter. The first, sector-wide tech volatility. Recent earnings from software companies have shown outsized reactions, increasing expectations for Adobe. Second, cash flow and growth metrics. Traders are watching key financial indicators like free cash flow and operating margins for any signs of weakness. Third, options market positioning. Elevated implied volatility suggests traders are hedging for a bigger move, but will it materialize? With an implied move above the historical average, here are a few strategies to consider. Implied versus actual move discrepancy. If Adobe moves less than the implied 7.5%, option sellers could benefit from overpriced premiums. Iron Condors. If you anticipate a smaller than expected move, an iron condor could take advantage of inflated IV. Post-earnings volatility crush. Calendar spreads may be useful to capitalize on the drop in implied volatility post-announcement. Adobe's implied earnings move is sitting above the historical average, suggesting traders expect a heightened reaction. ORATS data shows that while the implied and actual moves have been relatively aligned, there have been instances of major divergences, making this an earnings event to watch. Are you trading Adobe earnings? Let us know in the comments below, and don't forget to like and subscribe for more options, data insights from options research and technology services. Thanks for watching,